Hi, this is Scott Murray. Welcome to the Daily Economic Market Shout for Thursday, April 20th, 2023. It's great having you with me here today. Today, we're going to talk about earnings. We've seen Tesla last night, again, commenting about price decrease. Profit margins have been really in the eye of the market these days. We had clearly throughout the pandemic pricing power by companies, and now that is being taken away slowly. When we look at pricing power, we see inflation being an element both in the cause and the effect of the number, but we also see strong economic growth. We are seeing both kind of moving back. So not surprising, excuse me, that we're seeing a lot of companies that are not able to step up to the plate and get the numbers that we would expect. When we look at this earnings season, remember when it started, actually when we go back to January 1st, 2023, expectations for the first quarter were roughly matching the fourth quarter of 2022. Now we're expecting a decline of around 7%, and this would be the worst decline since the second quarter of 2020. And it's really a marginal, just a kind of a tick down in terms of revenue that's really cascading into the negative profit growth. But I think the real story we need to continue to focus on is what is 24 going to be like? And that's really where, remember, the market thinks about earnings, thinks about opportunities 6 months ahead. At that point, when we think about it, we'll probably be in the late third quarter, early fourth quarter of this year, and that will start becoming a focus as expectations for 24. And we're still sitting there with double-digit growth over 23. 23, sort of flattish, but what I'd like to do is really look at 24 versus 19 and see what the long-term trend is, because we've been through quite a rocky road. And when we look at that, and if we look at the expectations, we're getting back to about a 7 or 8% annualized growth rate. And that's pretty healthy. That's kind of what we would expect out of equities, out of companies in the broad sense for the market. And we think that that would be something that the investors would be happy about. Given what we've been through. And even at that point, we start thinking about an expansion that will kind of be a stepping stone to additional growth. But we have to get there with expectations for 24. And I think that's going to be really challenging because interest rates continue to weigh on companies. Lower inflation is hurting the profit margin characteristics. And then, of course, we have these dislocations both in fuel, and we probably get something in terms of the debt ceiling and how that cascades out. So we encourage investors today to think to 24. Keep your eyes on there, even though we're going through the jittery parts of the market as we get first quarter 23 numbers. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.